The broad customer base of the Royal Mint is clamoring for gold and silver from the institution, with a proverbial surge around the facility, metaphorically speaking, kind of like precious metal soldiers waiting for the next delivery. Let's talk about this development and how the latest price of gold and silver could have an impact on the institution as we explore. There's a lot of things going on, a lot of different developments that are having an impact on mints around the world, with the Royal Mint essentially being ground zero, considering the LBMA is close in proximity. And this has caused a lot of problems, but it's not just for the LBMA good delivery bars of silver, where there's a lot of stress right now, but it's other areas as well, too. I'm going to be referencing a piece here from Discovery Alert that gives some insight from this late-breaking news here as we begin to digest every single movement of the price of silver and gold and how that could impact. I think it's going to actually intensify the demand. Now, places like Summit Metals, well, they carry Royal Mint products as well, too. So they're likely to be affected as well. Summit Metals, a channel sponsor, is a great company. One of the fastest growing bullion dealers on the planet right now. Check them out. They have great customer service, fast shipping times, and a growing selection of products, including Royal Mint products. The institution is 1,100 years old, and they do produce coins, but they also produce bullion as well, and they're experiencing unprecedented demand pressures that have significantly impacted standard delivery schedules. Market conditions have created a perfect storm of supply constraints and surging investor appetite for physical precious metals, fundamentally altering traditional processing windows. Indeed, that is the case for sure. The current market dynamics reveal that Royal Mint delivery delays have become commonplace as an institution struggles to keep pace with extraordinary order volumes. The surge in precious metal investments has overwhelmed traditional inventory management systems, forcing operational adjustments across multiple product categories. And the thing is, it's amazing because I'm not hearing the same kind of news out of the United States Mint, although I'm sure demand is picking up there too, but not like this. Under normal market conditions, the Royal Mint typically maintains relative swift processing capabilities for in-stock precious metal products. However, the current environment has stretched these timelines considerably as manufacturing capacity reaches maximum output levels. A Royal Mint spokesperson, Carly O'Donnell, confirmed that demand for precious metals has reached exceptional levels across both domestic and international markets. The institution has responded by implementing a significant ramp-up in production output, running manufacturing presses at intensified capacity to meet the unprecedented order flow. The most significant impact appears concentrated in silver product deliveries. That makes sense, where the institution has issued specific warnings about potential delays. This targeted concern reflects the broader silver market squeeze affecting London's wholesale silver trade, where inventory shortages have reached critical levels. Inventory management has become increasingly complex as certain popular products face severe stock shortages. The situation has forced the Royal Mint to implement strategic decisions about production priorities and resource allocation across different precious metal categories. Silver coin collections have experienced particularly acute availability challenges, reflecting broader market dynamics that have pushed silver prices more than 80% higher in London's wholesale market throughout last year in 2024. This dramatic price appreciation has intensified investor demand while simultaneously creating supply bottlenecks. The institution has struck additional gold coins as well in response to demand pressures while working diligently to replenish silver inventory. However, customers purchasing silver products specifically may encounter extended waiting periods as manufacturing capacity gradually catches up with order volumes. For multi-item orders spanning different precious metal categories, batch shipping policies may further extend delivery timeframes. Customers seeking further fulfillment might consider placing separate orders for individual products rather than bundling items together. That's pretty interesting. So, that's one way to kind of keep things in tune and in check, is to order, like these Royal Arms, for instance, and just order the Royal Arms instead of bars and different designs. So, yeah, fascinating indeed. The extraordinary demand for precious metals reflects multiple converging factors that has created an investment environment unlike any seen in recent decades. Understanding these drivers provides crucial context for why Royal Mint delivery delays have become such a prominent issue. The precious metal markets have delivered remarkable performance throughout 2024, both gold and silver reaching unprecedented price levels. Further recent gold all-time highs reveals that gold futures have surged to above $4,200 an ounce, representing a 58% increase for the year, according to market data from October of 2025. Silver has demonstrated even more dramatic appreciation, with prices climbing more than 80% in London's wholesale markets. Silver futures have currently trading approximately $51.98 per ounce, reflecting the intensity of investor demand and supply constraints affecting global markets. This exceptional performance has attracted both institutional and retail investors. That's crucial, folks. It's important to understand. And banks and other institutional buyers have contributed to what market observers describe as a fresh wave of orders accumulated in historic market squeeze conditions during October of this year. The retail investor rush has been equally remarkable, both individuals flooding with London street-level bullion outlets seeking small bars and coins, and I'm sure wholesalers as well. The ground-level demand has created additional pressure on manufacturing capacity beyond institutional requirements. And I think that's going to intensify with the latest dip in gold and silver. I think we're going to see more of this, people buying on the dip. So I think even if the price falls even more than where it is right now, we can continue to see the prices increase, or the demand increase. And why not? Buy on the dip. Buy in a hold, by the way. I think that's what we should be doing. British investors have shown particular interest in specific precious metal products that offer significant tax advantages. Britannian sovereign coins, and these are sovereign coins here, which enjoy capital gains tax exemptions in the United Kingdom, have attracted exceptional demand from investors seeking tax-efficient precious metals exposure. And if you are in the UK, I'd be curious to see if you know of any more people buying new bullion from the United Kingdom or from the Royal Mint to avoid that VAT. And London's position as the epicenter of global bullion trade means market pressures affecting the cities reverberate worldwide. The current situation has created unprecedented challenges for both institutional and retail precious metal markets throughout the region. And some of the pressures that we're seeing from the institutions is that market participants describe historic squeezes conditions during October of 2025. This extraordinary situation has pushed prices to unprecedented levels while raising serious concerns about market liquidity and operational stability. Inventories in London's vaults have reached critically low levels, forcing market participants to implement emergency measures to maintain trading operations. Fresh silver stock is being transported via air freight from locations as distant as New York to replenish depleted London reserves. The severity of supply constraints has created a feedback loop where institutional demand intensifies precisely when available inventory reaches minimum levels. Banks and other institutional buyers continue placing fresh orders despite this challenged supply environment, further exacerbating existing pressures. The institutional squeeze has direct implications for retail markets, as wholesale supply constraints naturally flow through to customer-facing precious metal products. The interconnected nature of London's bullion markets means disruptions at the institutional level inevitably affect retail availability. Then on the retail level, we're seeing street-level precious metal dealers across London have experienced extraordinary activity levels that have required significant operational adjustments. Hatton Garden, the city's traditional jewelry quarter, has become a focal point for intense buying and selling activity. Emma Seidenborn, who operates Hatton Garden Metals, described current conditions as a perfect storm of market factors. The intensity of market activity has required practical adjustments with dealers swapping formal footwear for athletic shoes to keep pace with demand. Security enhancements have become necessary as customer queues extend beyond shop premises to public sidewalks. The concentration of high-level precious metal transactions is relatively small retail spaces has created crowd management challenges throughout the district. And I recently reported on this from across the world. We're seeing this happen, and of course, London is no exception to that, for sure. Customer behavior patterns reveal the breadth of market participation, with individuals bringing gold bracelets, rings, and chains for sale alongside those seeking to purchase coins and bars. The bidirectional activity suggests both profit-taking from existing holders and new investment for first-time precious metal buyers. The intergenerational aspect of current market conditions has drawn particular attention. Experienced dealers note similarities of previous precious metal rushes, with older family members who lived throughout earlier market surges advising younger relatives to appreciate the exceptional nature of current conditions. So yes, indeed. So a wild situation that we're seeing here play out here in London and with the Royal Mint in particular. So more than likely, we're hearing some of the same type of things from the Perth Mint, not so much from the United States Mint yet. I think in some ways, the U.S. market here on this side of the Atlantic is a little bit slow in some of this surge activity. So we'll see how that plays out. I hope you found this video informative, insightful, and educational. Would like to extend a multitude of gratitude to you all for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.